What's going on, traders? Welcome to the market primer for Nov 14, 2022. This is Steve Place with PrecisionVolumeAlerts.com, and we are going to start off with the S&P. Now, look, I know there's a lot of lines here, and that's because we're really zoomed out. So what we're going to do is just take this off. And the glaring thing right here for the S&P is we have two volume peaks right here and right here. And in between that, there's not a lot of liquidity. And if we look at how the market's traded in this zone, so if we just draw a line right here, I know I'm being very unscientific, I suppose. But if you look at the price action, it's very fast through this level, right? Both to the upside and downside. We don't spend a lot of time here. And so it's reasonable to expect, even if you want to be bearish, it's a tough short right here because there's not a lot of liquidity. And we've seen instances where we just jam through this level before finding inventory again. Okay. Now, it's possible that as we come into some of these levels, we start to see some rejection and maybe a retest of this prior volume shelf, and that would kind of be a bullish setup. But we've seen, again, we had a really good CPI print. And a lot of people are off sides, and we could just see that push into this big level. Okay, and so I just want to keep that in mind when we take a look at all of these lines. So we're going to go to 30-minute chart, and we're going to zoom in a little bit more. Well, actually, I want to go to a daily chart, and I want to zoom in because I want to include all the volume shelves and things like that. So The main thing that I have, the low volume node that we could see some rejection from is going to be 401.5. And that's the big level to watch going into this week. And it's an over-under level for me. If we just blast right through it and maybe retest it, then that's going to be a pretty bullish sign. Odds are, if this market really wants to get going, we're just going to see swift movement, very similar to what we saw right here, through that. The only contention I have with that is we've already seen, just based off the past, 2 trading days where we had that CPI print, how much did we move off of that? So from the open to where we are right now, that's 3.5%, right? To see a push higher, that's going to be about 5% before we really start coming into some bigger levels. And then the real volume shelf comes in about 6% higher than that. And if we were to consider, based off of Friday's close, about a 3% move higher is that target. And that's not unreasonable. In bear market rallies, that's the kinds of moves that we could potentially expect. So I don't have a lot of levels in here because there just aren't a lot of levels to work from. If we start to see some back and fill and more sideways action, that's going to be a completely different dynamic than what we've seen throughout the summer trading action, just straight moves up, straight moves down. But right now, the lack of liquidity as we come into this is just something that you have to pay attention to. So 401.5 is the big LVN that I have. The volume shelves start around 404.5 to 405 quarter. Also prior support. And this volume shelf starts coming into play. Above that, 409.75 quarters is the next big level. And that's a really interesting level because if we look at the swing anchored VWAP off of all-time highs, that's where it starts coming into play. So if you want to make the case for a short biased bet, that's probably where you want to start. You probably also get away with slapping on a trend line right here, and the trend line could start coming into play. If we saw a swift move, that trend line is going to collect with the swing AVWAP from all-time highs, as well as the start of that volume shelf. So that seems to be a pretty decent short opportunity if we were to get that. To the long side, if you want to be bullish on this market, you really don't want to see these lows get taken out. It would be a lot of action, a lot of energy spent to get to that. Instead, what I think is a reasonable expectation, if we were to see a pullback, again, you don't even want to see Friday's lows get taken out. But this level right here, all right, and that's a volume shelf support. That's going to be 396.89 to about 397.5. That would be a good starting point. From there, I've got 394.57 thereabouts as the next level to work from. Okay, so that level, downside level right here, a smaller, more intermediate pullback level where it would be a nice to hold for bulls. We have this LVN, which could potentially see some rejection, but if we blast through it, odds are we're going to run up to about 404.5. And then if that level gets taken out, we've got 409.75, the swing AV WAP, and trendline resistance all coming into play. All right, so that seems to be a pretty reasonable place to work from. The next one's going to be the Qs. And again, we'll take off all the drawings. The NASDAQ did not trade the same way as the S&P. And this has to do with index components, and there's just kind of a lag right now with large cap tech. We do have this high volume node that would be a reasonable place to act as a magnet. And we have this LVN right here, which could be a bit of a repellent. But in between that, it's a very similar kind of characteristic with comparing it to the S&P, where it's just kind of a liquidity pocket that you have to worry about. You also have prior resistance right here, which is the start of a volume shelf as we come into this HVN. Okay. We do also have a lot of inventory coming into play very soon in the NASDAQ. And we also have prior resistance levels into this LVN/volume shelf. That's just going to be a big level. All right. So with that in mind, we can slap all this back on and we can start to zoom in a little bit and we can get a feel for some of these price levels. So what did I say? This LVN, did I get that right? Hold on a second. I just want to make sure I'm getting all of this. So that, because I'm zooming in a little bit. So this LVN right here is the big one that I'm watching. And that's going to come into play with this swing anchored VWAP against these pivot highs back from April. So I think that this is a pretty important level. I know I have a lot of other levels marked right here, and these are just kind of intraday levels where we've seen a lot of price action and a lot of chop. But the big level for me is going to be, what is this? About 297.88, maybe to about 280 to 298, about right there. So I think that this first yellow level is a decent upside level to work from, both in terms of a target as well as a potential short. Okay, so 297, maybe all the way up to 300 right there could come into play, along with a swing anchored VWAP. Okay, above that, we've got 303.5 to 304.60 as the next level that could come into play. And a lot of this would assume a lot of stretch. You know, if we were to see some kind of bear market rally with some strong follow on, that's the kind of price expectation we should have. To the downside, you know, one thing that we could absolutely look at is we could look at the swing anchored VWAP against the CPI lows right here. And so I know that's a very short-term marker, but I think that that's a good place to start working from. And that's going to be the upper edge of this volume shelf right here, which is around 282.25. Again, I don't think it would be healthy for this market if we were to see within a day or two a move back below those Friday lows. All right. So even though I'm saying that is a support level, you could see some trapped players if we were to come into that very quickly. So ideally what you would want is some kind of an overshoot and then a pullback. You see this swing anchored VWAP start coming into play right here, and then that's going to be a better support level to work from than a full retrace of those levels, because odds are if we do get that, we're going to overshoot. Okay, so that's going to be right around 282.5, maybe about 282 flat for that one. And then the big one on the upside is going to be that 297 to 300 level. Now I do have some other smaller levels marked right here in blue. I'm pretty sure that's blue. Just keep an eye out on those. That's 291.3, 294.17, and 295.85. And those are just intraday levels where we've seen selling come through in the past. All right, so that's just going to be an area to keep an eye on. Next up, we've got the Russell, the IWM, and you know, this is starting to look like a pretty decent double bottom. And I know I'm very hesitant to call bottoms in this market because right now having that kind of rip off of just a CPI print is a little bit suspect. I don't like it when the market moves hard like that off of one piece of economic data where it's not good news, it's just a lack of bad news. It's saying, oh, the market gets some breathing room with the Fed, you know, and that's just it is what it is, right? So if we take a look at how this market's traded, and we're going to just take this price action right here, and we're going to say, hey, where's some inventory? Well, inventory's right here, and this is a reasonable magnet, a reasonable target to just say, hey, prior resistance right here, a lot of congestion coming into play. So that's going to be right around, the HVN proper is going to be right around 199. The big HVN's all the way back up here, but we'll cross that bridge when we get to it. But starting off with this volume shelf right here into this inventory and maybe a bit of an overshoot, if we took out these highs and everyone starts screaming breakout into this LVN and then a reversal, that again, if that happened with the S&P hitting that big level and the NASDAQ hitting a big level, that's a very good selling opportunity, I think, for this market. So let's go ahead and zoom in. And we do have a downtrend coming into play. We've got this swing anchored VWAP coming into play. Also prior support, which is now potential resistance. And it's a very wide zone, I know, but it starts around 191.75 up to 193.5. And that's probably going to collect this swing anchored VWAP right here, as well as this trend line, potential resistance. All right. So that would be a good place to expect some sellers to come back in. From there, we've got this blue line, which is that high volume node magnet. So if we were to take out this level, and odds are what would happen, we'd see a pull, retest this level, and then come back into it. That would be the first target for bulls. Okay. Now from there, the upside's 203.96. And you say, oh, that's so unreasonable. Well, what is that? That's 8% higher. I'm not saying this week, but we come into a shortened holiday week with all sorts of weird stuff squeezing. That's well within the possibility of a bear market rally. Okay. That would be a serious stretch, but it is within the realm of possibility in terms of the kinds of volatility we've been seeing. Okay. To the downside, very similar thing. You don't want to see a takeout of the Friday lows, but those Friday lows is where where the first support lie. I can't get my conjugations right. Apparently, I'm not a native English speaker anymore. 186 to about 187 is going to be the first level. From there, if we were to retrace, I've got a level at 183.18. That's going to be about a 50% retracement of the Thursday rally. But again, you really don't want to see, if you want to be bullish on this market, you don't want to see a super deep dive back down to these levels very quickly. Okay, you can kind of make the case, if we stall out and then roll over, then you can make a better case for that support buy. But a swift move, if that were to happen, you would probably want to look for the first bounce and then short into that. Okay, so a lot of this is just path dependency. We still just got to assume a lot of range-bound, high volatility price action until proven otherwise. Okay, now let's hop over to the VIX, and spot VIX is rolling over. Spot VIX stayed low as we came into the CPI print. A lot of people have been talking about this. I think a really good indicator to watch is VIX 9-day. And this is where a lot of the risk premium's been. It's been in shorter dated options. 0DT options have been trading a lot. Investors have been using shorter duration options to hedge around event-based risk. And so that's one of the reasons that we saw, the 9-day VIX. Before the CPI print, the 9-day VIX was trading at 28. Meanwhile, the spot VIX, which was, it's a 30-day window, was trading well underneath that level. In fact, you could probably look at VIX 9-day minus VIX, and you can kind of get a feel for how much premium there is. In a normal market, there tends to be a slight discount in shorter duration options. So we saw that unwind, and I haven't taken a look at the VIX futures curve, but I'm pretty sure, let me go right here. There we go. I'm pretty sure, yeah, we've got some decent steep contango, which gives the equity market some tailwind. So if we, spots trading at 22.5, November futures trading at 24, we've got a decent premium into December and January. And if this whole thing starts to drift lower with contango, then that's a very bullish signal for the market. It allows the market to get, instead of breathing room with respect to the Fed, it's breathing room in terms of structure. One other, and I think that this is the huge signal, the MOVE index. Huge signal right here with a complete crush. This is basically the VIX for bonds. And we've basically been in a bond-driven market. And we came out of the CPI, and there's a lot of risk premium coming out. And there's a lot of potential downside for this with respect to risk premium in the bond market. If that continues to deflate, then that just helps the market overall. I guess breathing room would be a good sign for this. All right, so that's what we've got going into this week. If you have any other questions, feel free to reach out. Have a great day.